We go. Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, July the 19th. The year's 2023. Let's talk trading. Bottom of the hour trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal. We had a trader ask us to talk about bottom of the hour trading and covering. Now, we've talked about before, but maybe they weren't watching the videos when we did that. I guess Walmart, they said that you mentioned it the other day, but you know, it's funny because we've got some red news coming up here at the bottom of the hour.
Yes, we do. Excuse me. Yeah, we have red news coming up, and it's happening right at the bottom of the hour. And you know, so we got two things happening at once. You know, and that always makes it exciting times around here. You know, we got housing starts coming out. I don't know if it's going to particularly move, you know, the market very much. You know, it hasn't moved it very much in the recent past. Although it's a very good indicator as to, you know, the strength of the American economy. You know, so it's always good to pay attention to it, and it will drive the Fed to go and make decisions. You know, what they're going to do with interest rates. You know, now in terms of covering, it's just something that I've noticed, you know, an awful lot, you know, and before you went and actually came up with the brilliant idea, why don't we just put up an M30 chart? But what I've noticed is that, and it's happening right now, look at the chart right now. You know, what happens is we have the, you know, it's very, very clear on the 1 minute chart. You have the dollar, it moved, the pound yen moved in the upward direction pretty strongly over this, you know, over this last particular hour, and went up like 20 pips or so, my guess, you know. And then what did it do? You know, here we are, pretty close to now we are in the bottom of the hour.
Right.
But what did it do? It ran back towards the middle. It's just something I saw a lot, you know. It doesn't necessarily cover the entire previous 30 minutes and get back to the open, but it happens as well. But what it does do is it likes to get back to the middle of it. The numbers just came out, just so everybody knows. They were expected 1.48 million housing starts and 1.49 million new building permits, and they got 1.43 and 1.44 respectively. So, yeah, they're worse, but they're so close that we get what we get right now, where the market's not really even moving. It's not really responding to those numbers. You know, even though it's red news, if it comes in exactly what everybody's expecting, well, where it's going to move to.
Yeah. Well, just one thing about covering, it's when the current candle high is at or above the previous candle's top, and the current candle's low is at or below the previous candle's bottom. So that's what we mean by covering. The range of the current candle has covered, and I say completely covered, the body of the previous candle. So like you can see here on M1, the last candle covered, this current candle just covered the previous body. But on M30, when I actually ran the frequency distribution, M30 had the highest frequency of covering, even more than M1. Yeah, go ahead.
And when you're saying covering, you're talking about covering the previous candle.
Right.
You know, that's, you know, sometimes you get a huge candle that comes out there, and the next candle, it just doesn't cover it. It doesn't cover the whole thing. It may cover it in 2 or 3 candles, but when we say covering, we're only talking about
the current candle.
The previous candle.
Yeah, current candle and previous candle.
Yeah. And it just, I think it's just, you know, it's not for me anyway, it's not a reason to take a trade. I think you could probably build a system around it, but I haven't very much thought about it. But what it does do for me is it gives me a good bias as to what's going on. So let's say, for instance, I'm in a situation, you know, let's say, well, our previous M30 was a green candle. And let's go and say, being very, very hypothetical here, but let's go and say I was in a short and I was in a long, and my current M30 was red. So I've been in the process of actually starting to try to cover the previous M30. Well,
Like right
to
now.
me, that's sort of like right now. Now, to me, that's a very scary situation to be in, to be long at this point, because there's just such a high propensity for the M30 to cover. It's sort of like, keep my eyes open. It's not a reason to get out of the trade necessarily, okay? But it is a reason to go and put myself on high alert as to, this candle may go and actually run it all the way down and cause me, either significant drawdown or a significant loss. And so I don't use it as a reason to trade. I use it as a reason that, or as a bias, especially if I'm in a trade already. And I also use it as a bias in the sense that, let's say I have a situation and all my other reasons in my method say that, hey, go and take a trade in this particular direction. And if the M30 covering is favoring that as well, it's sort of like a little bit more, reason to go and take the trade. Gives me a little bit more confidence to pull the trigger. Now, Kiro, I know that you sometimes go and trade off of that. Can you explain that a little bit?
About the trading off of covering?
Yeah.
It's basically just trading out of the previous candle's wick zone. So right now we're in the upper wick zone of the previous M30. And so if I were to go short, I'd go short at the open or of the current candle, and I'd look for a cover. If it was a big candle, I'd look, like you were saying, what we would call a return bar, a bar that's, twice or more the normal range size. I would then look to maybe go to the, halfway point or 38 or 23, start playing the fibs.
Right, exactly. Yeah, like I said, I don't trade that, but I've seen you do that, and I've seen you get pretty successful in doing that. And it's just another method that you can go and do, and which is, and that's the great thing about trading. There's lots of tools in the toolbox, and depending on what you're saying, you're able to go and pick up maybe sometimes you can pick up the right tool at the right time to go and help yourself out.
Right.
And I say all that, and I'm going to go and give the warning of all this. If you're a new trader, pick one method, stick with the one method. Don't be it's sort of like if you're hanging drywall, right, or sheetrock, the reality is, at first, what is the first thing that you get taught on the job? And I know this is because in high school I did this. And the first thing you're taught to do is you're taught how to cut sheetrock. You're taught how to go and use the knife and cut it. And so for the first, I don't know how long period of time it was, you did nothing more than cutting sheetrock. That's all you did. That was your job. You learned how to use that knife and use it effectively. Okay? Then what them was they would actually have you start to go and hang it. And the reason why they did it didn't make sense to me in the beginning. So I'm like, well, why would you do that? Well, the thing is, when you start to hang it, well, what happens is you put it up and you put a nail in each corner just to hold it. Then you go back and screw it. But sometimes what happens is, because of the contour of the walls and things like that, what would happen is that, to keep it and make it look flat, you sometimes didn't screw the screw all the way in, or you didn't drive the nail all the way in. And sometimes you had to go and make additional cuts on the fly right where you're at. Not because your cutter didn't do it right, but just because of the situation in the room. And so I bring this all out, long story short, I bring this all out because, well, that's the whole thing about trading. What happens is that as you learn and as you go and continue to trade, some tools that you learn in your toolbox, you have to become very proficient at that, so that when you then have other opportunities, you can then go and start using those other tools to help you out. Not to go and confuse things, not to go and, be doing trading 12 different things all at the same time, but just sort of like, okay, I'm trading this method. This is my primary method of trading, but I've also learned through experience that this is a place that I need to get out. Perfect example of that is, with you, Tiro, you get out when you see a one ball pop up like right now, you'd say, okay, it's time to get out. you could say that, hey, yeah, I could have picked up more pips, but you've also through experience have learned that more times than not, okay, what happens is it rejects off of that point, and then it'll come back and maybe go and break that previous one ball. But the thing is, it happens more times than not. We've learned that through experience. Well, that's what we have to do as traders. You know, I think we become so myopic sometimes, and we're so focused in on one thing. What we have to do is take all of our experiences, bring it to the table, but at the same time, we need to also be willing to say, this is how I'm going to trade, and because otherwise it can get overwhelming and confusing. And it
Right.
probably sounds like I'm contradicting myself, but I'm not. It's sort of like you use those tools to help you. You don't trade using those tools.
In other words, they're not triggers.
Yeah, exactly right. They just may go and just, you know, I call them, laugh at me, I used to love this TV show, not the new one, the new one's terrible. The old TV show, Lost in Space, when I was a little kid. I used to love that show, and the robot would always go and say, danger, danger, danger with Robinson. Well, to me, that's what those tools turned into. It's sort of like, danger, 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 get out. And you saw me do that before, where I got out of a trade where I was up, and what happened was is I saw something that came up, and it's sort of like, I'm getting out early here. I'm just going to get out. I'm just chopping the trade, and happy to put some money in my pocket. And glad I did, because I hadn't, I would have given it all. Not only wouldn't I have made the money, but I would have actually taken a loss on the trade. And that's what I do. That's that's how I approach trading.
Yeah, and the funny thing is, just something that we've mentioned before, or I've mentioned before, once you put the trade on, the reason you put the trade on doesn't matter anymore. Now it's you're either up or you're down, and so you're either managing the risk or you're managing the money. And that's
Right.
just something that a lot of people don't seem to recognize about trading.
Exactly. The only thing I would maybe go and do is that what I may also go and do is say, and because a lot of folks will do this who are very successful, um, if once you're in the trade, they may go and say, would I enter the trade here? And if the answer is yes, then you stay in the trade. If the answer is no, then maybe it's time to go and exit and look for greener pastures. Um, and I think that just to go and add that little piece to what you just said, because you're right. Once you're in the trade, you're in the trade. Manage the money. Okay, that's easy to say. Manage the money. What does that mean? And there are different ways to go do that, and that's one way to do it. So, like, your way of managing the money is that, or managing the trade is, would I still enter the trade here? If the answer is no, then why are you there? Why you're in the trade? Get out. And that's a simple way of doing it. The nice thing about doing it that way is that it's very, very easy to see it. If you're taking trades on flip flops, and let's say I took the trade on the flip flop on the north candle, see 1, 2, 3, 4 candles ago, and let's say I got in long at 10.9 and ran all the way up to 16.2. Okay, I could have picked up 6 pips. Well, let's say I stayed in it because I thought it really was going to go all the way up to 25. That's a legitimate thing to think. Okay, but then we got a flip flop, and it dropped off from where I would have been up to 6 pips. It dropped 3 pips off, but I got a flip flop, and now it's a trade I could take to the south. Why do I stay in the trade there? Everything is saying, hey, go short here. Well, maybe that's the time to go and exit. Maybe even reverse the trade and now go short, because then I could have picked up 3 pips going the other direction. And to me, that, it can get very, very fast paced that way. In fact, you saw me do that yesterday where,
Yeah, speaking about fast pace, the fastest 15 minutes of trading is just about over. So, traders, I hope I answered the question, or we answered the question about the bottom of the hour trade. If not, feel free to, ask more specific questions. And when you're sitting down and trading, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.